Well, my clock says noon, so Central Time, so we'll go ahead and get started. So good afternoon and welcome, everybody. We're glad to have everybody join us this afternoon to talk about some retirement plan governance topics. Plenty of things to cover under this umbrella, so we brought to you a few of those topics today. So we'll go ahead. I wanted to introduce myself and Laura as we get started. So Karen Sanchez, I'm the partner in charge of the employee benefits vertical here at Sikich. I'm going to stop saying how many years I've been with the firm, but it's been a number of decades as well. Laura, do you want to introduce yourself as well?
Yeah, same. I'm not going to say how many years I've been doing employee benefit plans. It's a lot, suffice it to say. I am younger than Arissa, but I feel like not by much. But I'm a director at Sikich, also concentrating on employee benefit plan area. Been in the industry for, like I said, not saying a long time.
We could have put a poll question letting you guys guess how many years, but we opted not to do that as well. So you can feel free to put your comments in the chat box if you'd like, but we may not respond to those either on that. So for those of you who aren't familiar with Sikich, we just included a couple little bit of slides about the firm. Laura and I just finished wrapping up about 500 plan audits after October 15th, so we're really glad we're beyond that date. That puts us in about the top 25% firms in the country in terms of the number of audits that we're performing. I'm never going to say we've seen it all, but we've seen a lot in that area, and look forward to continuing to work on the plans in the coming year as well. You know, having the dedicated practice allows us to focus on a lot of different things in the off season, participate in committees, and really right now we're in the process of building out how we can do things better for the coming year for both our team as well as our clients. We at Sikich, we have clients in all 50 states, as well as outside of the country. We're broken into really 3 different pillars. We have certainly the traditional CPA services that you might expect, but we also have a deep bench in both the technology space and a lot of things in the advisory space. We often work with our counterparts in the human capital and payroll areas that help us support our audits, as well as in our retirement plan services area that help us with a number of different compliance matters on our audits. We have about 1,200 personnel, about 100 partners, and been in business for well over 35 years, and have thankfully seen a lot of growth over that period of time on our way to where we're at today. Before we jump into the agenda, our marketing folks reminded me we need to do some of the housekeeping items. So within the GoTo webinar, for those of you who are not familiar with that, there is the chat function within there, so please feel free to send questions. Laura and I don't want to feel like we're on an island and nobody's talking to us, so feel free to send your questions over to us. We may hold those till the end to make sure we get through the material as well. As I noted before, the handout of today's slides is in the handout section if you want to download that. We will be providing both CPE credits for the CPAs out there, as well as the RCH and the HRCI credits for those of you who need those. As you, I'm sure, are familiar, we do need to have you answer the survey poll questions throughout the process in order to provide that CPE, and you'll also need to complete the survey questionnaire at the end in order for us to provide those certificates, and those typically take a couple weeks for us to send out to you as well. So with that, we'll jump into the agenda. These are some of the areas that Laura and I selected to thinking of retirement plan governance, kind of what some of the best practices are. The Department of Labor has come out with guidance in the cybersecurity space. Obviously, that's increasing in this COVID environment, and those folks have been very busy during this time. And also, the SOC reports are getting more scrutiny, and it just becomes more important of your responsibilities to monitor your service providers on those topics. And then I'll go through some of the documentation of all the things so you can take credit for what you're doing. And I don't think we can do any presentation without talking about some plan errors. In the past year, we certainly saw more than we typically see in our audits. COVID was not a friend to helping administer your 401k plans. Clients were pulled in a lot of different directions and quickly and changing rules. So we saw quite a bit of errors occurring when we just completed those 2020 audits. So we wanted to share with you some of those things that in your overall review of the plan that you could be evaluating, opportunities for correcting those and putting additional controls in place as we start about to go into the next plan year. So for that, I'll have Laura kick it off with talking about some of the cybersecurity related items.
Sounds good. Thanks, Karen. Well, obviously, COVID, now that we're kind of a year and a half into it, did obviously give more opportunities to cyber criminals and brought up more things that were happening. A lot of attack on systems such as VPNs. There were stories about people driving around looking for weaknesses and a lot of information going back and forth, and we all kind of had to quickly adjust to being at home, and so it just brought more opportunities and for theft to occur and things to get breached. So we just reminders of alerting participants to exercise even more caution when it comes to their plan assets, where they're checking their balances, where they are when they're logging on, if they're logging on to secure websites, secure web Wi-Fi, and then also just educating employees on, the more recent attacks, the sending information over email, being careful not to do that because it's easy to intercept them, just using secure uploads, and then maintaining those levels of control, including the reviews and secondary verifications of transactions when needed. Some of that is really key in making sure if a strange email comes over, you want to make sure that it is legit before you respond or click on any attachments. We actually received an odd email from a client, and how we caught it, I didn't expect to get anything from her. We had finished, up her audit, we had filed everything, and it was a weird thing that came through. So I deleted it, and the other because the other team member kind of went through and said, well, this doesn't seem right. Why would she be sending me anything? We're done. Responded and said, hey, did you mean to send this to me? And an automatic response came back. And at first you think, oh, okay, legit. But when looking at it, it was weird English. It was not the tone that we're used to from this client. And so we forwarded up to IT. And of course, it was a link with a malicious intent. So we deleted it. The client had already been aware that these emails were going out and was on top of stemming it. So it's just having that, your employees being alert, erring on the side of caution. If something comes through, picking up the phone to call the client, that would have been our next step. Hey, did you really mean to send this? This seemed odd, and a response seemed odd. But I bring up this story because it just seems like it's more and more clever all the time. Your first instinct is, oh, she responded, it seems fine, until you really look at it and think, that's not how she usually comes across. There's no hi, there's no salutation to me saying, hi, Laura. It's just a weird response. So it's just, again, being aware and continuing and updating that training as things happen and change. And, and that we'll talk a little bit about reviewing and updating cybersecurity policies and procedures, and including those plan considerations.
We had a client this year as well, Laura, that not only did someone at their client site did not touch it, and they got all access to the entire network of the plan sponsor. And although the participant data was protected at the record keeper and the payroll information was also in a cloud somewhere else, they had downloaded all the files that were residing on the company server, and all of those were under the ransomware attack that they were going through. So it definitely is happening to a variety of clients, and understanding all of the data with respect to the plan and where it's living at. Sometimes we'll have clients say, oh, it's all at the record keeper, but anytime you download any information, then all of a sudden it's accessible on your network as well. So it's really understanding all service providers and who all has access to that.
Agreed. Okay, next slide. So because cybersecurity has been a topic in any industry you're in, and the DOL has behind the scenes been working on this guidance. They had testimony and research done a few years ago, but this is the first time they've actually issued guidance, and they kind of covered 3 areas that we're going to cover. Tips for hiring a service provider, a lot of information that goes back and forth, cybersecurity program best practices, and then just some online security tips, which is good for plan participants. Again, just basic rules. A lot of them aren't new. They're just reminders and more education to just be cautious. And a lot of recent court cases, when participants lose money, the first people they're going to go after, of course, is their plan sponsor or the record keeper to recoup those. And lots of times it will go in the participant's favor unless there's some, extreme negligence that happened on the participants. behalf. Okay. So tips for hiring a service provider. There's a lot that we do. We look at them and compare, and we look at fees, but some of the other things that a lot of the service providers are on top of and are working towards is just having that information on their security standards, what their practices are, and keeping your data secure. There's a lot of sensitive data that you're giving to those service providers. There's demographic information, the participant assets are at risk. I mean, all that is at these service providers, payroll, everything. So, just some due diligence in looking, publicity. When we get new clients or when you get new vendors, it's just to do a Google search. Is there any publicity out there? Recent attacks? I mean, everyone's going to have them. As Karen said, it's sort of a matter of when it's going to occur and not if you're going to be attacked. There's going to be a breach. It's just a matter of how bad was it? What was your response to it? So looking if there's significant litigation, like if that service provider has been in the news negatively and something that should be a concern. And the SOC reports that the auditors use are not geared toward covering these in detail. Even if people kind of assume that they are, that's really geared toward more the specific areas we're auditing. And even the SOC 2, which is more about security of information and keeping that private and more specific and can be related to cybersecurity, is not necessarily just geared toward that. We have seen a lot of requests from clients in increasing that SOC 2 because that tends to speak more to how is our information being handled and stored and secured and kept private and restricted. There is a SOC specifically for cybersecurity, but I don't think it's really taken off in the industry as much because of all the other work that's been done to develop policies and procedures. And then contracts, one consideration should just be making sure that they're going to have ongoing compliance with industry changes and things that happen. Everything's constantly evolving. Cyber criminals seem to adjust as quickly as we come up with security patches. So all that stuff, just making sure that they're updating their policies and procedures as much as they need to, just like we would. So best practices are not really a surprise. A lot of these have probably been part of the cybersecurity frameworks that have been issued for several years. Just having that policy in place, documenting that policy, conducting a risk assessment, just kind of examining it and looking at it and making sure that there's no holes, and doing the third-party audits and testing. And that's just, can somebody break into your firewall? Can somebody get in? I've been subject to fake emails that are on purpose just to see if I would take the bait. It's always nice when you get that congratulations, you passed the test you didn't even know you were taking. But again, it's just a test that the organization's employees are educated, are aware, and are taking those cautions. I really think I speak for a lot of IT departments that they'd rather get the email saying, hey, is this an issue, versus after the fact that now they've got something to fix because something occurred. One thing that the DOL, I think, really wanted to specify is a lot of times an organization will have a framework, will have a program, but they don't consider the employee benefit plan considerations. I mean, there's a lot of sensitive information going back and forth. There's transmissions to payroll, there's transmissions between payroll and record keepers. If you remember way back when, Target, when they had their breach, was actually not a direct hit on Target. It came through a third-party provider. So it's sort of similar to, it may not be a direct attack on your organization, but it could come through one of your transmissions or one of your open access points from one of your providers. So it's always good to make sure that you've considered all that as well. And I can't stress enough about training and reminders to employees because, and then, like I mentioned before, it really is just a matter of when these days, how bad it is and how far it goes, is making sure the organization has a response plan and how quickly they can identify it and curb everything from happening and getting worse. Okay. Documentation, I mean, we're auditors, so we always talk about documentation, and Karen's going to talk even more about documentation later. You probably get sick of hearing about it, but it does provide evidence that you've done what you can do, and that's part of your response. It's documenting your policies. It's providing evidence that you are doing your diligence and you're doing your best to see the plan and the company and making sure that you've done the policies that make sense for your organization and what's going on. And that policy should be properly approved by appropriate leadership outside the IT department, making sure that everyone's on board, they understand the policies, review it periodically, because again, things always change, so updates are needed, and making sure everyone's on board with what this policy should be, again, based on the organization, what's going on, where the concerns may be. Always we stress access controls. Some of the things people don't think about is leaving open access points. A lot of SOC reports do have exceptions, or a lot of big deals are made out of, well, we have a terminated employee, but we didn't see any access. It's not necessarily that that particular person has gone in and accessed anything once they're terminated. It's the fact that you have an open access point that somebody could breach. It's a weakness, if you will. And then periodically reviewing for appropriate access. There's a lot of changes of employment or position, and that may mean maybe you don't need access to something that you used to, or maybe there's inappropriate access. You can imagine somebody at a record keeper, if they can go in and add an employee, change an address, and initiate a distribution, that's not a great segregation of duties, and that opens up a lot of potential loss of assets. And then just your normal logical access controls, use of passwords, making sure they're strong, making sure you're considering what goes into that. And I'm very guilty of using terrible passwords. And our cybersecurity partner used to give me such a hard time because I can't remember a lot of different passwords, so I use the same one. And he was right. Sure enough, it got compromised once, and I had to go through and change everything to different passwords. So I'm guilty of the same, but making sure you're using passwords that make sense and are complex enough to not be broken. Okay. Again, awareness training, updating it, making awareness. Don't forget basics like encryption when you're doing those transmissions I talked about, and just being ready to respond quickly to mitigate the extent of the damage and the impact that it can have to the employees and organizations, being able to identify those breaches quickly and shut them down. Okay.
I think sometimes we'll see that clients will email us all their payroll information with no password encrypted and all the social security numbers and everything. So our system accepts it. We cannot send it out based on our rules, but it always makes us a little bit nervous when we start to get all those things emailed over.
And these online security tips, again, this guidance is not really anything that is stunningly new. It's more, these are the things to think about. So setting up your online account, this was one that was actually new to me when I was reading over the guidance. You have a retirement account, maybe you're just not somebody that needs to log on and monitor it all the time. You set up your deferral and then you're done. Lots of times an unused account can be just as dangerous as logging on incorrectly or not having a good password, because if they're looking for something that's sitting there stale, they can go in and register and set up your account, and then they have access to do and initiate whatever they want to do. So it's things like that, making sure that if you have online accounts that you've actually done that and monitoring it routinely. Using strong, unique passwords, the multi-factor authentication. I know I've gotten weird text messages with codes that I did not initiate. So I have a brother-in-law that actually is in IT, and I always text him like, should I be worried about this? And he's like, no, it's working. They can't get in because the code was sent to you. So that is really strong. Your personal contact information, keeping it current so that if there is a breach, someone can text, email, call you right away. We talked about unused accounts, just getting rid of them, deleting them. I think being wary of free Wi-Fi or unsecured Wi-Fi is something that's definitely not new, but there was a case where somebody logged on to an airport Wi-Fi, checked his balance in his retirement account, and unfortunately someone was nearby, stole the login information, and before the guy even landed at his destination, his retirement account had been wiped out. So it's just being careful of what you're doing on that Wi-Fi. We talked a little bit about examples of phishing, and then just keeping the antivirus software updated and current. Okay. Well, they issued this guidance in April and then just started auditing right away, which is probably the fastest, to be honest, I've seen the DOL do something. I think, again, that speaks to how seriously they take this and how concerning it has been. And it has been something they've been on the top of mind for several years, and they take it very seriously as part of their job to protect, plan participants and their assets. In fact, in as early as June 2022, just to kind of do document requests, see if you've got a policy, see if you're considering the plan, and making sure that you've documented all this. And most organizations probably lack the documentation of compliance or fail to address everything. So seeking guidance and help from experts, asking the questions, might be something worth doing just to make sure you've addressed all the considerations for your particular organization, so that it's adequate for your size and what you have going on. Okay. So again, just quick takeaways: consulting when you need to. There's a lot of cybersecurity experts. We have a consulting team. They've been a great resource for us. And if you have questions, we don't, when we have a client that's not a client, we don't charge for quick questions. It's always nice to pass by something quickly with somebody. Any concerns over security of the plan, making sure that we're talking to our service providers about this, reminding employees and participants to be diligent and expect new creative. If something doesn't seem right, then don't go there. Don't give information over the phone. Don't give information over the email. It might be legit, but there's more of a chance it's not. And then turnover at companies add a lot of risk as companies try to remove access quickly or change access or new hires. So just keeping track of all that's going on. Okay. All right, first polling question. Are you aware of your company's cybersecurity policies and whether they include considerations of employee benefit plans? Yes, no, or unsure.
People are, while we're waiting for responses, we did have one question come in about one of the attendees has worked for different organizations that believes the accounts might be too small for a DOL audit. Do you have any thoughts on whether or not those DOLs just targeting the larger ones, or if they would be looking at the smaller organizations as well?
I think anybody is up for review, no matter how small. If you've got a benefit plan and if you're filing, you're definitely on their radar and could be selected anytime. I don't think anyone's too small. I've seen smaller companies be targeted for remittance issues that showed up, wrong filings. I think, I mean, what are your thoughts, Karen?
Participant complaints too. It just takes one participant to call the labor about a concern, and irregardless of the size of the organization, they're required to follow up on it, whether or not it's an inquiry or a full investigation. They still will call as well.
Yep, that's a really good point. So poll results are up. It looks like 50% yes, so that's good. Unsure 44%. I'm guessing a lot of those probably are yes, and no is just a small percentage, so something to think about. Okay. All right.
All right, so we're going to move on to SOC reports next. Laura's
I tried to pull you in with cybersecurity because I find it so interesting, and I only know a little small amount of what some of these other guys that do this for a living. And I've spoken several times with IT cybersecurity experts, and to me, it's so fascinating to listen to them and things they find and things they do. And so I pulled you in with that to get you to pay attention before I got to SOC reports, because like Karen said, I may be one of 5 people on earth that find these interesting. But you do have that duty to oversee the plan service providers, which you are aware of and and part of that oversight actually is to review these SOC reports. There's a lot of information that's in there, and trust me, it's not something you need to read word for word, but it's just being aware of what's in there. It talks about how they process transactions. It does talk a little bit about keeping the data safe, and they do cover logical access. And any issues that are identified in there that you need to be aware of that could impact your plan is something that you want to make sure that you've shown that you've been on top of. And then for most clients that are doing limited scope audits, because your record keeping and payroll is the one that has the most processing going on and the most sensitive information. So that's probably at a minimum of what you want to kind of review and keep on top of. So once you do that review, it's important to find a method to document this because like I've brought up again, as auditors, we're big on documentation. We have a documentation standard we actually have to follow. So it goes to say if we don't document it in our work papers, we didn't do it. Even if I can tell you everything we did from beginning to end, if I haven't documented this, then it doesn't exist. I didn't do it. So that's something we bring up with clients, and there's really no hard and fast rule of how you have to do this. There's a lot of organizations that do it differently, and I've seen minutes where they have a committee and they designate somebody to review it. Sometimes it's an IT person that is most familiar with SOC reports and reviews it. And then they just bring and talk for a few minutes on anything that they need to worry about, any issues, or that there were no issues, or it seems sufficient and adequate. And they document this within the minutes of the committee that they reviewed, considered this. And everyone kind of agrees, okay, great. We developed a checklist that we send to clients as part of our planning. It helps zero in on what exactly you need to worry about. There's a lot of information SOC reports that can be very overwhelming, especially if you're not familiar with them. So this kind of helps target in, and once it's done, it's just really updating year to year, and something that we go through with ours. It's also a great way to just document that quick review. Also, I've seen memos done by clients. They just summarize quick items and conclusions. And again, that provides evidence that you've done your review and done your due diligence. So, and any number of ways to do this. So I wanted to walk through some of the things you should think about. Like I said, reading it word for word, you will not be able to stay awake no matter how much coffee you drink or what time of day it is. And there's, again, a lot of information. So it's really targeting what you want to be aware of. So you first want to look at kind of the type report. So a type 1 is literally as of a day. So what the service auditor did was go in on November 16th, let's say, and make sure those controls were working that day. That's it. These are pretty rare because auditors really need it to cover a period of time, and that's really the most, if you're going to spend a lot of money on getting a SOC report, it's most useful for you to cover a period of time. But this is a good starting point for a lot of organizations who have not had SOC reports before, so you might come across one once in a while. A type 2 will cover it, so January 1st to December 31st, let's say, and that means that what the auditor has done is not only looked at the controls that are in process, but also tested a period to make sure they were actually operating during that period. You want to look at the coverage. So if your plan is a calendar year plan and the SOC report's a calendar year plan, you're good. There's no gap. You've covered the same period as your plan year. If you have a SOC report that ends at September 30th or October 31st, you have a few months difference, not a lot to really be concerned about. Most organizations like Fidelity or Principal will provide a bridge letter that's saying that nothing significant has changed. And you're looking for things like they've did a completely different system that they're record keeping on or changed a bunch of controls. And it's really rare. I've been looking at some of these reports for years. It's very rare to have such a significant change. So just for a few months, not a big deal. You can get some comfort in that. If you have a calendar year plan and a report that's June 30th, maybe you have you can get a couple reports to kind of cover that gap. But that's something you can always, all this stuff you can discuss with your auditor, and they are familiar with these. They have to review these as part of their audit procedures, and so they can walk through with you as well. The opinion, you want to know if it's a clean, unmodified opinion or if you've got a qualification, which I'll touch on in a little bit. The CPA firm, there's a lot of firms that dabble in this, but there's a lot that actually are very well known, do several, and specialize. So that's something to kind of consider. And then any other changes noted, there's a lot of mergers within this industry. So sometimes that'll be noted in the SOC report, and you've all probably been subject of being part of MassMutual and then merged into Empower and some of those events that occur. So then the scope, if you're looking at a report and you're wanting to look at it for record keeping services, you want to make sure that that's applicable to your plan, and that's exactly what you're looking at. And then subservice organizations mean that there's another organization that does a piece that is significant to the controls working. So for instance, Fidelity is a great, easy example because they carve out all their IT information. So anything to do with their IT controls are in a separate SOC report. So if you have Fidelity, you're looking at the record keeping report, and then you also have to consider the IT report, because together that's kind of the whole control system, if that makes sense. I will say a lot of them are not really significant, and a lot of times you can pass. But again, if you have a question on looking at this from your standpoint, then just feel free to consult with your auditors. Okay, and then you get into kind of the big part of the SOC report, the control objectives and what they're covering. So this kind of everything they do is in this document. That's why they very much restrict it to just the auditors, just their clients, and they don't like these to get out, because really this is everything they do. So how they process your data, how they record it, you know, how they handle when you upload payroll, what they do from their end, how they're handling when the participant elects to do investment election changes or deferral changes or transfer their funds, initiate distributions or loans, and how they're actually processing the contributions to the participant accounts that you're uploading. And then some of it is things they do that you have no part in, like allocating income that comes in and dividends on the participants' investments and things. Those kind of cover the big things of what you're kind of looking at and making sure that they're doing an adequate job. IT, probably the biggest thing is logical access. You want to know how they're restricting information to your plan. And then change management really just means that they're using even the software or an in-house system. When they're doing changes, is it blowing out the system, or is it controlled and approved and slowly implemented so that it doesn't disrupt everything? And then some of the reports will cover, you know, plan and participant level reports like trust reports or participant statements. And you want to know that they're done, reviewed and looked for accuracy, and they're complete, and they're capturing all the transactions that are going through. Probably the most important thing that you need to pay attention to, like the other stuff I've gone over, you can lightly look it over. Like I said, you know, discuss it with your plan auditor. We go through it with our clients so that they kind of help them to look at it. But this is probably one of the most important areas. The complementary user entity controls is your control. So it's the expectation that plan sponsors have these in place and they're working. So most of these you probably do have in place and you probably are doing correctly. You're just kind of not documenting that you do. But imagine like complete and accurate payroll records. So the record keeper will assume that you have controls in place to make sure that everything you're sending to them is correct. So all the demographic information, any new hire information, any changes and anything like that that's being uploaded is complete and accurate, because they're taking your records and they're just uploading it to their system and allocating it based on what you sent. So you can imagine if something is wrong, they're uploading wrong information. Back when it was more manual, I remember a client accidentally taking an Excel spreadsheet and moving down the Social Security number one line. So every single allocation to every participant was wrong. Thankfully, a lot of electronic stuff now prevents that from happening, but obviously wrong information got into everybody's account. Access to the record keeping system, who at your organization can actually log on to the record keeping system and what can they do? It makes sense to limit that to who's involved with the plan and not open that up for anyone to access and initiate transactions. You can see where problems would occur there. Making sure when they leave the organization that access is quickly terminated and letting the record keeper know, hey, our plan administrator left, please terminate that access point. And then doing a review of the trust reporting, any transactions, doing approvals if that's part of the process, just making sure you're doing all that. So looking through these controls and picking out the ones that are actually applicable to you for the services you do and making sure you have these in place is probably one of the things that would be looked at. And we look at it as auditors as well, especially during our procedures, and kind of make sure you have this and help point out anything that you may be missing as kind of a double check for you. Okay, like I said, just pick out the ones that matter. Some may not apply. So if you didn't set up your plan for the current year with this provider, then those aren't going to apply to you. So it's not every single one. It's just kind of making sure that the ones that do apply to you are addressed. Like I said, auditors also review these and they perform walkthroughs at a minimum. So they usually will highlight anything. We like to, during our audits, kind of bring to our clients' attention anything that we feel like is missing or any suggestions we have to improve this, to kind of help them monitor that, because it's a lot for you guys to keep on top of. Okay. So then when you have issues with SOC reports, I mean, this is when you really want to be on top of looking at these, because you don't want to be caught off guard with an issue that impacts, you know, your plan that you were not aware of. So a lot of exceptions that are sprinkled throughout the report, not a lot of them are going to have a significant impact. They happen. They looked for 25 checklists and 5 were missing. They just couldn't locate them. It doesn't necessarily mean that control wasn't working. It's just something the service auditor has to report, and that they couldn't finish that testing, and they can't just replace it with 5 that do exist. I know, having done SOC reports before, we're looking for, you know, that sense of, is it really in place and it's just missing, or are they not doing it? And you do get that sense when you're in there and in the details. And also there might be, you know, mitigating controls. So if you're a plan sponsor that does your own vesting and there's an issue in the SOC report about vesting, you're not going to be as concerned because you're already looking it over. So there's a control in place there to make sure that you're overseeing what's going on at the service provider. So exceptions, not a big deal. Now, if you have a qualified report, it is a big deal. If something really went wrong, and the service auditor, again, having come from that world as well, we really look hard to see if that's where we have to end up. You know, we look for any other controls that can mitigate the problem and what happened. And we have a lot of discussions with a service provider to get to the point where you have to qualify the report. It means you have an issue. And you want to pay attention. Lots of times they quickly address it. They implement new controls, and so the impact to your plan most likely will not be significant, if anything, but your auditors should point this out to you, and this is something, again, you want to be aware of. And it's something of how often are these reports qualified. I mean, a lot of them have never had a qualification, and a few service providers seem like they have quite a few issues. So if an issue were to occur, you can see where the question would be, well, were you overseeing that provider, and did you notice that they had qualified reports year in year after year? How come you didn't consider changing? You know, things like that could come up. And again, your auditors, we review these, we do an evaluation process. And if there is an issue like a qualified report, the other impact to you may be cost, because a lot of times that means we have to increase our sample sizes, we have to do more, reach out to the participants, and increase our review of anything that you guys are doing to mitigate that risk. So it does impact you from an audit, and it could impact you from a cost standpoint. Okay, so again, takeaways: reviewing key SOC reports. You don't have to review all of them. Like I said, record keeping, payroll is probably important. Document what you did, take credit for the work you've done. Complementary user entity controls are probably the most important to look at annually, make sure they're in place, and just consult with your auditor and make sure they're reviewing the SOC report as well, and they can help you explain or review. And like I said, we have a checklist we developed, and we go through that with our clients to help them out, because I know this isn't something that's easy to pick up and do.
Great.
So I think with that, all yours, Karen.
Thanks, Laura. Well, continue with the theme of documentation. So many of you know that we asked for, you know, other items of minutes and, you know, your overall plan governance, things that you did through the year, you know, as we're working on doing those audits. A lot of that is because if the IRS or the Department of Labor comes in and wants to do an audit or an investigation on the plan, that's one of the first things they're going to ask for. And if there's turnover at the client or the plan sponsor, those are the helpful things for the next person sitting in that chair to be aware of too. If anything, we saw the last year in this era of what I call the great resignation era that we're in now, of the turnover we're seeing, you know, it's really helpful to be documenting kind of what's happening. So not only can you remember what was done in the plan, you know, in prior quarters, but also, you know, any changes that you might have in those members would also have familiarity with what has happened in the past. So we just put together some best practices for what we see in retirement planning committees. It's a question we get all the time of, you know, if somebody doesn't have any minutes or documentation, kind of just trying to, where do I start at and what information do I put in those? So first step would be making sure you have a committee. Most effective committees that we see loop in folks from your benefits, your accounting, your legal, or your finance teams. We typically would see senior members of your human resource function, finance and operations included. Sometimes we'll see the CEO or owner. It just really depends on the overall, you know, who's the last person in line that's going to be dealing with a significant plan issue, and making sure that it rises to the level of including people that would be the main people that would need to address some of those issues. So every organization is a little bit different in terms of how they operate these committees. Typically, most of our plans have an independent financial advisor on there to help navigate many of the fiduciary things, and certainly the investment arm and evaluating fees and performance of the funds that are in there. Typically, those individuals are attending the meetings, often in a non-voting capacity, though they're not a formal member of the committee, but they're there to really quarterback and advise the group and keep you on track and making sure you're aware of a lot of the issues, that are out there. Recommend not getting that group too large. It becomes difficult to get everybody together. A lot of times we'll see if they're too big, you can't get the members together, so they cancel and they don't reschedule, and unfortunately those meetings just don't happen. The committee needs to understand what their roles and fiduciary responsibilities are. So oftentimes those investment advisors might be the source of providing training, or the record keepers often provide some fiduciary training too. I love as many cheat sheets as I possibly can have to make me remember what it is we're supposed to do. So kind of having a annual committee charter, laying out what you might do at each time or at each meeting that you've established, putting it on the calendar. I like due dates. I work well with deadlines as well. So putting those dates on the calendar, and then the meetings will happen and fall in place. Making sure that someone is taking meeting notes to, again, go back to our documentation, and then make sure those minutes reflect, everything that was talked about in the meetings. Service provider oversight is one of the things that's typically covered in those. This is really, as Laura said, one of the ways that you do review your service provider is taking a look at those SOC reports. But one of your fiduciary responsibilities is not only to select the service provider, to monitor them. And the monitoring, your service providers would include your third-party administrators, your record keepers, your investment advisors, trustees, payroll providers, anybody who touches the plan in any way. So typically, a lot of times your investment advisors are doing those fee benchmarking for you, so you're documenting that in the minutes. Making sure that they're also evaluating the advisor's fees. Sometimes we see these awesome benchmarking reports, and it goes through and looks at every possible thing, and they're really coloring, they have cool graphs and everything, and they do a great job analyzing the plan fees and the record keeper. But we see the advisor fees are carved out, and actually when you look at those, they're actually fairly high. They just weren't included in the overall benchmarking that was paid. So just making sure you looked at all the costs associated with the plan that's being paid out of plan assets. Laura already mentioned the SOC reports, so I won't go into that in great detail, but it's an opportunity to at least mention it once a year in the minutes, and you can reference another checklist or something like that. But putting it on that checklist calendar kind of as a reminder of doing it, because it may not be so top of mind as it is for us to make sure that it's done. Evaluating the service that your service provider is providing. Are you getting complaints from your participants of timeliness? Are there issues with errors? Are they not getting statements? What feedback are you getting from your plan participants on how it goes? The cybersecurity things, making sure your service provider, as Laura mentioned, is up to date on those. We're seeing so many people leaving the market right now in terms of record keepers, and it's harder than ever to have enough systems and processes in place to, address these cyber threats. It's interesting when you talk to some of the large record keepers, they talk about how many hits they're getting on their system. We don't hear that, but they're just having constant options or opportunities for people to try to break into the systems. So we put together some thoughts of what you could consider in your committee calendar. Most plans are meeting quarterly to make sure you're staying on top of the investment funds and the changing performance and things along those nature, that at least most advisors are doing that quarterly, maybe semi-annually in some smaller plans. So typically every quarter you review the minutes from the prior quarter, make sure you're on top of all the legal things that are going on, markets, investment performance, things like that. So we just put some suggestions for other things to think about: communication strategies, education things. It's a good time to look at the fees that were charged, your advisor fees, review that SOC report. It's probably available in the first quarter of the year, depending on if you're a calendar year. Second quarter, look at what's coming out from your service provider, your committee structure. Usually your compliance and non-discrimination tests are done. Make sure that you understand those. Is there plan design changes you want to make or things you should be doing to make sure you're passing those tests? Different things. By third quarter, we're probably done with your plan audit, and we may or may not have provided a list of recommendations for management to consider of deficiencies, things to improve. That's a great opportunity to look at how you can improve things for the coming year, make sure that everybody's aware of errors or issues that need to be addressed. You know, as auditors, we always like to see when we come back the next year that clients have addressed some of those things, made improvements, things of that nature. Fourth quarter, see what's new from your service provider. Look at your investment policy statement that kind of outlines what your rules are for choosing to retain funds in the plan. Your 404C compliance, make sure all those notices went out that inform the participants of the change. Make sure your service provider is sending them out. If you're required to send them to terminated participants, you know, all those good things. So I think, Laura, we're going to have one more poll question here.
Does your plan have a formal retirement plan committee that documents administrative decisions as well as investment reviews? Yes, no, or unsure?
Okay. So we're waiting for those answers to come in. We had one more question. They're indicating that their firm does not offer an opinion. Should they offer an opinion? So that's a great question, especially in the environment that we're in right now, because those that we were doing limited scope opinions, basically meaning that we did a disclaimer of opinion, which we actually, our opinion is, our accountant's report is that we did not provide an opinion, typically because of the carve out of the investment information that was elected to not be audited. We're moving into, in calendar 2021, us auditors are kind of excited about it. We'll be issuing a new type of opinion, an ERISA 103A3C opinion, in lieu of the limited scope audit, where we actually get to provide an opinion again on those that were limited scope audits before. And then there'll be a second section that talks about what we're essentially disclaiming in on the investment. So I'm assuming that might be referring to the disclaimer of opinion, but every plan that is required to have an audit of those with 100 participants or more has the audit done. We provide the opinion letter that accompanies the financial statements and the 5,500 along the way. Or if you're a smaller plan, maybe you don't need to have an audit done, in which case you could voluntarily do some pseudo audit procedures to do the oversight over your plan. Laura, did we get the results in yet?
We did, and 58% says yes, they've already got a formal retirement plan committee. 18% said no, and unsure is 23%.
Perfect. All right, so plan errors. Well, this one can and has been an entire section in prior years. So we'll go through this quickly to let you guys get on with your day. But as I mentioned before, we just saw a ton of errors this year. Clients that normally it was very clean. Some of the things that caused those was the turnover. I mean, many of our clients have small departments. It's one person doing things and they do a great job and they've been there a long time, but then all of a sudden they're gone. So taking a look at who's providing the services to your plan, making sure there's a backup option, making sure there's at least 2 people that are handling those different functions, and you've documented kind of how things are handled. We saw a lot of them where, as I say, somebody knew how to do everything, but as soon as they're gone, it's a confusion, and certainly 2020 was a challenging year for not only changing personnel, but just the disruption that it caused. Lack of understanding of the plan provisions by those administering the plan. A lot of people kind of scares us when they don't know where the plan document is or what's in it, because it's difficult to administer the plan in accordance with the plan document when you don't have that information available. The definition of compensation is probably the #1 challenge, because it all depends on how you set up your payroll system to comply with your plan document. If you elected to exclude bonuses or exclude overtime in your plan document, then your payroll system pay codes need to be set up to match those of what's in the plan document. Making sure that you're talking to the different plan advisors on different issues as they come up. All of a sudden clients added a lot of new pay codes in the year. Some got it right, some didn't get it right in terms of what the plan document said. So ask questions. We are completely open to having our clients send us questions. We like to be part of the finding solutions rather than telling them a year later that there's problems as a result of the way it was set up. As I said before, just having some control processes of when a new pay code is set up. Does somebody review that? Is somebody looking at the plan document for changes that are being administered that way, and making sure that team really understand what's in that section of the plan. It's probably the area we spend the most time on in the audits is making sure that the payroll was set up properly. Because once you send the information to the record keeper, for the most part, they're in the business of doing that, and most things, flow properly assuming they got correct information. The IRS recognizes that there's so many opportunities to have errors that they have correction programs put out. Really 3 different programs, and in the spectrum as you go down the list, they get more expensive in each one. You want to find your errors early and correct them early, and then you might be able to fix them on your own and just document how you did that in case it's ever looked at later. There's no cost to the IRS, it's just a cost to whatever the error was. The goal is to make the participants whole. So if you didn't withhold the money you were supposed to, there's some money you might put in to correct that, just depending on what the nature of the error was. But if you think about it always as if the error hadn't happened, what would the participant have in their account balance? And that's essentially the position you need to restore them to in order to make sure that they were not penalized as a result of a plan sponsor error. If you don't catch it timely, or if it's such a huge error, you might not be able to fix it on your own. You might have to file with the IRS, and then there's going to be a filing fee and a cost to prepare that filing. Sometimes if it's questionable the way you want to fix it, you might want to sort of get permission first under that program. And then the last one is you didn't catch it at all and the IRS caught you, and you're going to just pay what they tell you have to pay at that point. So again, the sooner you catch it, the better it is and the less expensive it is. And it's just some of these errors just become an administrative nightmare when they've gone on, for years and not been detected. So obviously monitoring it soon pays off and is a lot easier to handle that. So the top errors that we saw and continue to see, no shockers from our team on this, just maybe the number of them that we saw, is in your employee contributions. As I mentioned before, the incorrect definition of compensation. It's not that it's wrong way to do it, it just may not match your plan document. So inconsistency, not getting the auto enroll or the auto escalation to happen timely, or that the employee's deferral election didn't agree to what the employee had. We've seen typos. It was supposed to be 3%, it went in at $3. It was not put in timely. Suddenly it's months later and that deferral was not put in the wrong person, not put in at all, any combination of those things. The employer contribution then as well, many plans have a match component. So as you would expect, if you set up the one side wrong for the employee deferral and definition of compensation, that often might carry over to the employer side. You may or may not have the same definitions for both the employee and the employer money. And you can also have eligibility determination errors. Sometimes plans are letting in employees immediately to defer, but the company contribution, they might have to wait a year, for example, or a longer period of time. We saw some issues with timeliness of contributions, either delays. A lot of it happened around that March timeframe when, that getting the money in the 401k plan wasn't top priority when you're shutting down your office and needing to deal with that. Furloughing your employees that used to send the money into the plan. And then not just the delays, but not having a good process to reconcile contributions. One of the first things we do is we look at everything that was withheld from payroll and what got deposited into the plan. And we try to reconcile that, down to the dollar on the employee deferrals, because it really should not be different. And so a lot of times, anytime there's a special payroll, an adjustment to payroll, a bonus payroll, anything unique, sometimes those are being missed as well. And so identifying a reconciliation process where you can look at, year to date, what did you send to the plan in deferrals, and then comparing that to year to date what your 401k, what your payroll records show, because that'll show you some of the adjustments that might have been made or any of those unusual payrolls that happen, and allows you to identify that more real time versus us coming in at the end of the year and saying, a year and a half ago you missed, some money and it affected 20 different people in different directions as well. So I just gave you some more, details on administering the plan for definition of compensation. Just again, reading the plan document and comparing it to payroll. If you take anything away from this section, that will get you a lot of things caught and making sure you've got controls over when you add new payroll pay codes into the plan. As Laura said, same thing, access, who can enter, who can make changes to your payroll system, getting that segregation of duties in place. We touched on some of the eligibility things. You know, did you let them in too early? Did you hold them out too late? If you had acquisitions, did they get put into the plan timely? Looking at your auto enrollment and auto escalation, a lot of plans have those, and sometimes those we saw errors on. A lot of this is driven by your record keeper, and it's so important that those files you upload to the record keeper are accurate. And you're uploading a complete record. We have some clients that are only sending in the employees that participate. Well, if you don't give them all of your payroll population, they can't auto enroll the people who aren't enrolling in the plan. So making sure that those census file feeds are accurate is critical to making sure that your record keeper is administering those programs properly. So in terms of corrections, I'm not going to go through all these details here. The IRS sets out these correction programs. The concept is they refer to as a QNAC, a qualified non-elective contribution. And in general, if you failed to withhold what the employee wanted you to withhold, you would put in half of what their contribution is, as well as 100% of what you were already supposed to put in as a company, plus any lost earnings. There's opportunities to reduce that 50% down to 25% in some elements, or in some situations. And sometimes you can reduce it down to 0 if you have an auto enrollment plan or you catch it soon enough. So I outlined some of the rules that outline each of those programs. You know, each one of these you kind of have to dig into the facts a little bit more to see which one you qualify for when you're making some of those corrections. And I know we had a lot of those discussions with clients this year. You know, auto enrollment plans, if you catch it within a certain period of time, you might not have to make the employee contribution. You always would need to make certainly the employer contribution element, because the employee shouldn't be shortchanged as a result of you not putting in what they opted to do. And again, timeliness of contributions. This is one of the Department of Labor's hot topics, is making sure that the companies or the organizations didn't hold on to employee money in order to fund their own operations. And I don't think that most clients that's typically the case. It's more administrative errors or issues associated with that. But you know, that's an area we're required to test for. We find a lot of errors in that. You want to make sure that whatever time frame you're using, you're consistent. So if you, a lot of people will do really, really good at the end of the year, right before Christmas, because they don't want to work over the holiday and you want to get it in, and all of a sudden you put it in the day of payroll. That becomes sort of your new criteria, that if you did it once on the day of payroll, the expectation is that you can always do it on the day of payroll. So don't set the bar too high for yourself of what's not reasonable, but challenge yourself that you're sending it in as soon as the rule, as soon as administratively feasible, which may differ from organization to organization. I will tell you, the Department of Labor in today's environment, with the way systems are set up, you know, the challenge is, okay, start with the rule that you can set it in the day of payroll and provide evidence why you can't, you know, that it takes another approval or reconciliation or what all happens within your control environment that prohibits you from doing it the day of payroll. So make sure you know, are looking at your remittance practices to make sure they're as quick as you can, but certainly being accurate and making sure that it's reasonable of how you're sending things through. So I think we've got our final poll question here.
Did your company add any COVID pay codes during 2021 that were excluded from eligible compensation for the plan? Yes, and we properly excluded them from plan document. Yes, but we didn't review plan document to ensure compliance, and no.
This was an interesting one. I know, you know, some of the major providers like an ADP out there, I believe when they sent their COVID pay codes in, they just automatically pushed it out to all their clients. And then they automatically defaulted that they would be 401k eligible, knowing that most clients, the last thing they were thinking about during rolling out all the things that they needed to deal with in March of 2020 was, oh, I should go amend my 401k plan document for this new pay code. So those I think went in properly, but then some of the other ones, clients might have had to add them or, you know, make certain selections, or they might have had different types of pay that maybe weren't some of the standard, you know, Families First, some of those types of pay codes that they were creating things because of people being furloughed or other things of that nature.
Yeah, I would say we have yes. We have 22% that said yes, we properly excluded, 17% yes, but we didn't review the plan documents, and then 60% said no.
Right. All right. One of the things our marketing team just helped us build out on is we created a employee benefit plan resource center on our website. If you're like me, I can't remember where I put everything, so they put it all together in one place for us. So you may know that we do different articles and newsletters on different things. So we have one place now to house some of those different articles. These webinars will be housed on there as well when the recordings are done, as well as a listing of upcoming webinars. So really just kind of a place to keep everything together. You know, we have information certainly on the different services that we offer that might be of interest to you or your organizations as well, kind of all at one-stop shopping there. So we put out the new 2022 plan limits, things like that out there, as well as a couple of guides on the new audit standards that I mentioned earlier with our new opinions. There's a couple of documents out there with overviews of some of those rules as well. So our plans to continue posting things. So if there's ever anything that you're interested in seeing, let us know. But with that, I think those are the only questions we had come in, or we can certainly do some more follow-up with everybody later. But for us, the hour went by quickly. Hopefully you guys feel the same way. Appreciate you guys joining us. Please do fill out the surveys. We not only we need it for the CPE, but we like to know what topics you guys want to hear about and how we did, so we can take care of things better for you guys. The recording will be available in case you guys want to watch it over Thanksgiving dinner, you know, just saying football, parades, turkey,
Share it with family.
Audits, you know, could be a choice. But we'll have that available if anybody missed it as well. So take a look at some of the upcoming webinars. We've got several more coming up on the series as well. So I wanted to thank everybody for joining us this afternoon, and have a great afternoon.
Thanks. Bye, everyone.
Bye.